All right. Hey, and good evening, everyone. Welcome to another episode of Bitcoin Brief with your host, Tone Vays. We have a new host for you today, and I want to go ahead and introduce you guys to Florence. And how are you, Florence? You've been on the show before. You have to unmute. There you are. How are you?
I'm good, thanks. How are you?
Excellent. Those of you that remember, Florence joined us for you were on there was a political show, not the halving show. You joined us for the big political show. Go ahead and tell our audience a little bit of something about you and your background, where you're from, and then we'll start off the show as usual. It was hard to replace Leah, and now it's hard to replace Christine, but we're gonna keep trying.
Awesome. So I was born and bred in Kenya, in the capital city of Nairobi. I studied communications and journalism at the university, and after which I went on to work briefly in the NGO sector. I worked there for about 5 years, and then I left the NGO sector and around the end of 2015. And during that same period, I developed an interest in Bitcoin and started to learn about Bitcoin and what's happening in the world of Bitcoin. Since then, I've been closely following this space, and also during the same period, I've been working on and off in the private sector. I've also dabbled a little bit in entrepreneurship.
Awesome. And Jimmy, so a couple of more facts. You did your master's in communication out of the UK, but the more interesting part is prior to COVID, you had a side business going in Nairobi of making bone broth for restaurants.
Yes, that's what I was doing before COVID. But then COVID happened, and things have been going downhill since then when it comes to the business aspect. Yeah.
All right, so Jimmy, we have a bone broth expert on the show now. I'm dying to try it when I get to Kenya eventually. I was supposed to be in Kenya on March 21st. Unfortunately, I ended up taking the flight to the US instead. So that really sucked.
That's when the lockdown happened.
All right, so let's get going with the show. Jimmy, how are you doing?
I'm a little tired right now. It's Friday afternoon. I'm just like, why isn't it breaking this all-time high? What the heck? And we've been waiting for like hours. What's going on?
I know, it's frustrating. We'll get to the price after we cover a few stories. So Florence, the floor is yours.
Okay, so let's go to screen share. Moving on to our first story. Just a minute as the website loads. Corporate Bitcoin frenzy. Companies are now holding 15.3 billion in BTC. Companies now hold over 842,000 Bitcoin, which at the current Bitcoin price of 18,200 is worth 15.3 billion. So we're seeing that public companies and institutional investors are continuously accumulating Bitcoin. This was started off with MicroStrategy's ambitious 425 million Bitcoin purchase, and has led to a broad institutional frenzy around the dominant cryptocurrency. Tone, what's your analysis on this?
The corporations are really starting to get in the game, and the interesting part overall is what people are saying. So what I'm seeing a lot in the news cycles on Twitter is like, well, corporations will not let Bitcoin drop and pull back. And I don't think that's like, people are just guessing. People are just assuming that. In fact, a lot of corporations are a little late to the party, and it's their advantage to have Bitcoin drop a little bit before they actually buy in. So, but it's great. And the interesting part is, as Bitcoin rises, the amount of billions of dollars that these corporations have will increase by default, because eventually, for something like MicroStrategies, their Bitcoin position, I mean, if they invested 25% of their cash into Bitcoin, give it another few years, and 80% of their cash will be in Bitcoin, even if they don't take on any more Bitcoin, because the value of Bitcoin will rise enough to make sure that Bitcoin is their biggest investment. That's what's happened to a lot of people in crypto that decided to buy into Bitcoin. So this is, of course, a good thing. But I also kind of tweeted at Michael Saylor today because I'm seeing it more and more. Jimmy, you and I covered this just the other day on the last show. People are really stressing Bitcoin as a store of value, and it feels like they're really like stressing it. And I always believe that Bitcoin is both. It's a store of value and a medium of exchange. It's obviously slightly more important as a store of value, but I don't like dismiss the fact that it's a excellent medium of exchange because of its properties. No third parties, has more privacy than any other payments, than traditional payments, faster than traditional payments. So it has a lot of properties for medium of exchange. Sure, it's not as important as a store of value, but I don't like how people are dismissing the fact that it's an amazing medium of exchange.
I don't know. I don't think it's that amazing a medium of exchange or method of payment. There's hundreds of methods of payment. Now, there are sectors in which Bitcoin outshines everybody else. Darknet markets, sort of any peer-to-peer thing where you don't want anybody knowing anything in the middle, things like that. But like the big use case in Bitcoin, especially for corporations, is as a store of value. They have giant cash balances. The fact that about 5%, almost 5% of Bitcoin supply is currently in corporate treasuries tells you something about how they view this asset. They're not doing it like, say, the last cycle just to make a quick buck on trading or something like that. And it's for that reason that I think that, the current run up isn't having as many violent crashes like we did in 2017. 2017, a lot of that was caused by exchanges, that offered serious leverage on trading, and those that got liquidated, continual liquidations and so on, would cause big drops, and on the opposite side, big ups and downs. But things seem to be going a little smoother. I guess, Tone, you'll have more to say about that in a bit, but that seems to be what's going on, and I think it's a good thing for these companies. As long as they're not trading in sort of a leverage position, though we know that hedge funds will do that at some point. But I mean, right now, I think it's pretty good. And 5% is a significant amount. I expect that to grow to like 20 in the next few years.
Yeah, I'm just gonna bring back my favorite use case for my favorite corporate use for Bitcoin. And this particular use case does involve it being as a medium of exchange and not a store of value. For a company like MicroStrategies, yeah, Bitcoin is clearly way more important as a store of value. For a company like Cash App or Square, it is more important as a medium of exchange as long as they properly do it. But my favorite use case, my favorite corporate use case for Bitcoin as a medium of exchange is Netflix. I've been talking about this use case for what feels like over 5 years now, that Netflix could be completely global without even having accounts for people. All they have to do is pull up a Bitcoin QR code in the app or in a smart TV, any smart TV, no account needed. You want to watch a movie, you want to watch a show, you want to watch an entire season of a show, just throw up a QR code and let anyone, anywhere scan it and pay you. Of course, they will have to implement Lightning for that because they're small payments. but that is an incredible use case. And I don't understand how Netflix hasn't made an announcement yet. I mean,
that's not really a great use case because their business model is a monthly subscription. And this is like, for that, this is actually quite bad because you need to either lock up like a year's worth ahead of time and then trickle it over, or you have to do like a pay per movie or something like that. And that just doesn't sell that well. I mean, you can look on Amazon, you can go buy a particular movie for like $5 or something like that. But generally people just like Amazon Prime or something like that, where you get a buffet of different choices and you just go and get them. So I don't know if that's necessarily a great use case. And really, like, there are tons of ways in which they can get paid. Yeah, there are places in the world that you don't have a way to pay for Netflix, but that's not the places that Netflix is popular. Netflix is popular in the US and Europe and places like that, where it's very easy to go and set up, say, like your credit card to pay them once a month or something like that. And that's how they make most of their money. So I don't see that as a great use case or an argument for method of payment being the main driver for Bitcoin.
I'm gonna push back a little bit again, because I don't have Netflix, but I do have Amazon Prime. And anytime I actually want to watch something on Amazon Prime, it's not available under Amazon Prime. So I still have to go and like pay for it as a one-off. Like, and I'm sure Netflix has the same problem. Anytime someone really wants to watch something on Netflix.
No. Netflix has a different model. So everything on Netflix is just free, right? Like as long as you're subscribed. Amazon has a different model where Amazon Prime gets you like 8 different services. And if you want more, then you have to pay for the rights to it, and so on. So it's very different. And I mean, like, that's like sometimes you can pay for it just by saying buy it now or whatever, because you already have an Amazon Prime subscription. You don't need a QR code.
Thank you so much for that interesting analysis, Tone Jimmy. So moving on to our next story, we have, with a rapid increase in the price of Bitcoin, we have accusations that Tether is responsible for this Bitcoin pump, as you can see here on this picture here. Tony, you want to give us your analysis on this?
Sure, unless Jimmy wants to go first. We haven't talked about Tether in quite a while, and anytime Bitcoin is pumping, the accusation is always the same, that Tether is doing it. And this is just very recently, I think this is all from today. You can see 80 million Tether printed, another 80 million, and then another 80 million. And if you click on the next tab from CoinGecko, Florence, and we look at the years worth of history of, oh yeah, you have to click on market cap, and then 1 year is fine. Market cap on 1 year. And if you just look at how much Tether has been printed all year, it's quite a bit. I mean, we started at just under $5 billion worth of Tether, and now it's at about $18 billion worth of Tether. And look, I don't know how the investigation is going into Tether, and I'm not paying attention to it. But the, logic dictates that the Tether is not being printed out of thin air. I mean, you have to have one hell of a conspiracy theory that Tether is being printed out of thin air. Literally, the US government is looking into every single penny. And how in the world do you think Bitfinex is going to print Tether out of thin air? Obviously, this money is going into a bank somewhere. I don't know which bank. I don't know where they have the regulation. Those are the details I don't know. But I believe that Tether is not being printed out of thin air. Why is so much Tether being printed? Well, Bitcoin is worth a lot of money. And a lot of exchanges hold Tether. I mean, Kraken is a giant company. Kraken has almost 1,000 employees. If they haven't broken 1,000 employees yet, most of the people I know from the Bitcoin space from 2014 that are still in Bitcoin and didn't go off and start a shitcoin. Half of them are working at Kraken. From Dead Held, Pierre Richard, Sonny Ray was working there for a while. A bunch of guys that I knew at the New York Bitcoin Center. I can't even keep track of all the people that Kraken's hiring. And Kraken is probably one of the biggest holders of Tether. Do you guys really think Kraken would be exposed to Tether if Tether was an outright scam, printing Tether out of thin air? Come on, guys, just think. The reason why all this Tether is being minted is because there is demand for Tether, because no one trusts all these other stable coins. I mean, there was a story today that the US government is somehow using Circle's stablecoin to send money to Venezuela. And I mean, the Bitcoiners don't want to use that. They don't want to use the stuff that the US government's using. They want to use stuff they can just move around. And the US government hates Tether because they beat everybody to it. It's the biggest, it's the most trusted, it's the most stable coin that's worth $1. It's unfortunate that it's only 75% backed because somehow they managed to lose $1 billion that was supposed to be backing Tether, and we're still not sure what happened to that money. But Tether was never, well, I shouldn't say never, but I don't believe Tether was ever printed out of thin air, but the money that was backing it up somehow went missing, and someone needs to figure out where it went. That's it for me.
Thank you. That's definitely make a good point. That's some food for thought. Jimmy, do you want to weigh in on that?
Yeah, the thing is, like, there are all these like Tether conspiracists that are like, oh, Bitcoin price is going up because they're printing Tether out of thin air, and that's what's pumping the price. And this comes up every single time there's a bull run, and it's honestly kind of tiresome. The reason why Tether goes up when Bitcoin goes up is because there's a lot of people coming into Tether as a way of getting into Bitcoin as well. And we know that there's a huge demand for dollars all around the world, especially in places like China. Tether for a long time has served the role of being the dollar hedge for a lot of people in China, and that's the role that it takes. For a lot of people in China, this is like their first step into crypto. Is, well, I don't want to buy this volatile thing called Bitcoin, but I will go. I would like some dollars, so they go and buy Tether with their yuan, and that's essentially what happens when there's a lot of demand. This is what happens, and this FUD is just it's kind of gotten ridiculous and out of hand, and but yeah, I mean, expect them to keep doing that. I mean, as far as I'm concerned, they're about as irrelevant as like the BCH folks.
I'll add one more comment in that if it's discovered that Tether is a giant scam, I think Bitcoin will double in 24 hours. maybe triple in 24 hours. If you guys think Tether is pumping Bitcoin, wait till Tether implodes. If your conspiracy theory is correct, because everyone will be selling Tether at first 60 cents on the dollar and then 40 cents on the dollar. And where do you think they're going to go? What do you think they're going to be exchanging Tether for? So if Tether does have some kind of an implosion, oh boy, is Bitcoin going to skyrocket to the moon.
Okay. Thank you for that. So we recently, the BlackRock CIO of fixed income, Rick Ryder, was talking about Bitcoin replacing gold on CNBC this morning. I'll just play the clip here.
Before you go, you had alluded to the distinction between what's happened with the price of gold and Bitcoin. and you said that you think it's moving towards Bitcoin. Is that a long-term trend? Does that mean you're a Bitcoin bull? I asked because we had talked to Jamie Dimon earlier this week, who, despite JP Morgan supporting crypto in a very big way, and actually Bitcoin to some degree, on Bitcoin itself, he seemed to think it's still very possible if it ever really reaches escape velocity, and maybe it's getting closer as it passes $18,000 per Bitcoin, that the government actually would try to regulate it.
So, Andrew, I mean, I think cryptocurrency is here to stay, and I think it is a durable, and you've seen the central banks that have talked about digital currencies. I think digital currency and the receptivity, particularly millennials' receptivity of technology and cryptocurrency is real. Digital payment systems is real. So I think Bitcoin is here to stay. I think, am I a Bitcoin bull? I mean, I don't do a lot of it or virtually any of it in my portfolios, my corporate portfolios, my business portfolios. But do I think it is probably, it's hard to say, is it worth the price it's trading at today? But do I think it's a durable mechanism that do I think will take the place of gold to a large extent? Yeah, I do, because it's so much more functional than passing a bar of gold around. And by the way, the way you can track.
Okay, so that was the BlackRock CIO of fixed income. We also had a recent interview on CNBC where the SEC chairman Jay Clayton stated that we determined that Bitcoin was not a security. It was much more a payment mechanism and stored value. Our current payment mechanisms have inefficiencies, and those inefficiencies are the things that are driving the rise of Bitcoin. I'm just going to play you a segment from that interview.
A couple of other topics. One is cryptocurrency, which has been on your watch. You haven't necessarily approved it for any real market-making opportunities, and I think there were a lot of people hoping that you would. I want to show you a tape. I talked to Jamie Dimon yesterday. Obviously, JP Morgan's gotten behind crypto. I think there were a lot of people who thought that he might also be a supporter of Bitcoin, and he said that he wasn't because of this. Let me play it for you.
My experience with the government is they can regulate whatever they want when they feel like it. And, Bitcoin is worth $200 billion, something like that. If it gets bigger and bigger and bigger, it will be regulated.
So what do you think? Will they?
Well,
you didn't.
Well, let's put it this way, Andrew. We did not regulate Bitcoin as a security. When people use crypto assets as securities to raise capital for a venture, the SEC regulates that. And what was happening in the ICO craze was people were using ICOs and essentially making public offerings of securities without registering them with the SEC. We determined that Bitcoin was not a security. It was much more a payment mechanism and store of value. But the government does regulate payments. And what we are seeing is that our current payment mechanisms, domestically and internationally, have inefficiencies. Those inefficiencies are the things that are driving the rise of Bitcoin and other stable, I won't say stable in the case of Bitcoin, but driving these types of digital assets. And we're going to see more of that. And I think we're going to see this mature, and we're going to see more regulation around the payment space.
All right, so that's the SEC chairman, Jay Clayton, admitting that that the current payment mechanisms that exist have inefficiencies, and these inefficiencies are in fact driving the rise of Bitcoin. Jimmy, do you want to weigh in on that?
I mean, they're trying to. I hear Jay Clayton is going to be out of office pretty soon. It sounds to me like he's trying to angle for a new job. And he wants to get paid a lot of money, and he knows that saying good things about Bitcoin with all of those Bitcoin companies that are going to have some pretty large market caps, that this is a good place to go. So I think that's part of it. Yeah, it is a store of value, and I think this is the right narrative. I kind of disagree with Tone that like method of payment is this giant use case, despite what he seems to be saying here. It's a more of a payment mechanism. It can be, but vast majority of people that own Bitcoin aren't doing it to go buy coffee. They're using it as a way to hedge against dollar inflation, asset inflation. Of all types, there's no real good place to store value right now. So, I mean, these are regulatory things. I tend to sort of gloss over some of this stuff until, like, you know, they pass a law or something. What they say or hint or whatever, it's kind of like reading tea leaves from the Fed chairman. It's not that interesting to me.
Okay, Tone, would you like to throw in your 2 cents in that?
Sure. Well, to me, I mean, that was interesting what he said. Our current payment mechanisms have inefficiencies, and that's correct. And the U.S. government doesn't even realize what those inefficiencies are because they continue to double down on them being inefficiencies by making them more inefficient. And it all begins with the AML KYC laws that became a big mess with the Patriot Act, and that became a bigger mess with the Bank Secrecy Act. Not to mention, prior to the latter, there was also FATCA and FBAR. For those that aren't familiar with those, please look them up. FATCA is really, really bad. FBAR is pretty bad too, but FATCA is worse. And all of these regulations that surround who you're able to pay, where you're able to send money, and how much you're able to send money. And these nasty regulations is what is going to destroy the US dollar. I don't believe it's the amount of money printing that's going to destroy the US dollar. I believe it's these KYC AML laws that don't allow people to spend their money as they like. I think that is the ultimate death blow to the US dollar. And every time some government bureaucrat says our payment mechanisms have inefficiencies, I hope he realizes what those inefficiencies are, because it's not the speed of the transaction and it's not the stability of the currency. It's literally KYC AML and not giving people privacy in their payments.
Okay, thank you for that analysis. So we're just gonna keep it moving now. The mining pools, Poolin / and BTC.com just announced support for Taproot. As the BTC Times reported, the implementation of the Schnorr Taproot consensus rules were merged into the Bitcoin Core repository in October. The next step will be to discuss how the upgrade is to be activated on Bitcoin's mainnet. The discussion is now taking a step forward, with Bitcoin mining pools taking the lead in signaling their preferred direction. What are Schnorr and Taproot? Schnorr and Taproot are widely seen as important additions to Bitcoin's technology stack. Schnorr is an alternative algorithm to ECDSA, which is currently used to generate cryptographic signatures. Schnorr signatures would enable the flexible creation and execution of multi-signature transactions by combining signatures. This provides added privacy, as multi-signature transactions would become indistinguishable from regular Bitcoin transactions. Taproot is the specific method in which Schnorr signatures will be leveraged to realize a privacy-preserving smart contract solution. It was first proposed by former Blockstream CTO Gregory Maxwell in the Bitcoin developer mailing list. Since then, Several iterations have taken place, leading to the pull request that was eventually merged. Jimmy, let's have your analysis on this.
Well, so this is all about how Taproot will be activated. So the code has been merged into 0.21. I think they had a release candidate yesterday. So we're pretty close to having the code actually in the Bitcoin Core client. What's missing now is some path to activate it. So the code is there, the tests are there, everything else. It's just not active as part of the node. And there needs to be some mechanism in order to activate it. Previously, we did BIP9, and that didn't really work with SegWit, and that we ended up needing another BIP in order to decrease the threshold from 95 to 80%, and that caused it to essentially create Bitcoin Cash and all the hard forks from 2017, 2018. But that this time they're like, okay, what should we do? And it's not entirely clear exactly how it's going to go. So I guess what the mining pools have done is they put together a website, and they're saying, okay, well, we want to support this thing, and it's sort of like a letter of intent to do something or something like that. It's not the actual commitment to Signal or anything like that. It's just, hey, here's what we're thinking, and we have this much hashing power. Whatever you guys decide, like this is probably how we're going to support it. So that's what this kind of is. The big thing though is that we still don't have consensus on exactly how this thing's going to be deployed, whether it's BIP 8, BIP 9, or something else. And that's still the question up in the air. But this sort of thing gives us a way to know where the mining pool stands, so we don't have to like gamble or there's less perception of gambling or whatever.
Okay, in a similar development, just give me a second here to open the tab. We have support for Bitcoin's Taproot upgrade surges to 45%. Bitcoin miners are signaling that they support the Taproot upgrade, which aims to boost privacy and efficiency. In brief, Bitcoin mining pool F2 pool supports the Taproot upgrade proposal. As a result, the upgrade is now supported by 45% of the blockchain's hash power. Once activated, Taproot should improve the privacy and efficiency of Bitcoin transactions. So in this article, we see that support for Bitcoin's Taproot upgrade is at 45%, but in the previous article, the support was at 15%. So can you explain why the difference, the discrepancy?
Well, yeah, I'll jump in on that. This is actually a really good development because the articles were just 2 days apart. And when the first article came out, there were 3 mining pools that combined, I believe, for 25% support. And then the next day, one of the biggest miners, if you want to click on the next, that other tab, Florence, and literally the next day, the biggest mining pool, F2 pool, is already supporting Taproot. And this is actually really great news because after what happened 3 years ago, a little over 3 years ago with SegWit, as Jimmy explained, everyone is still a little bit shell-shocked as to how best to activate this without causing any more disruptions, creating any more forks. And we need a good relationship between miners, developers, and node operators. I'm not smart enough to be a developer. That's Jimmy's domain. And I'm not rich enough, nor do I want to put my life into a living hell to be a miner. So the only thing I can do is be a node operator. And Jimmy is 2 out of 3. He understands development and can comment on that. And he's running his own node. I don't think Jimmy's a miner. So we need this good relationship. And I believe the website that Jimmy mentioned that they put together is the next tab that we have. And this is and that's basically the website where you can keep track of which mining pools are signaling for what. And I think this is great. While the developers are trying to figure out the best way to activate it, the miners could, show some initiative and create a bit of a majority. Now, some of the things that I read was that it needs like a 95% mining supermajority. I think that's a little bit overkill. I think even in this case, I think 95% is a little bit lofty. I would be perfectly happy with an 80 to an 85% supermajority from the miners before it gets activated. Also, as you read through the articles, they're giving this thing a year to activate. Again, I think that's really far. I mean, look what's happening right now. Corporates are getting in. We need this stuff sooner than later. I think that their threshold is a little bit too cautious, being 95% supermajority, and their time is also a little too cautious, being a year to get there. I don't believe this is as technologically intensive to upgrade like SegWit was. Jimmy could correct me on that statement that I kind of pulled out of where. But I find it hard to believe that this is going to be more complicated than SegWit. So I personally, in my completely unprofessional opinion on the matter, I think that you should only need 80% miner support and 6 months time and get this damn thing in there. Jimmy?
Well, so I don't think that's the way to do it. And the developers are very cautious for a reason. They're doing it because they don't want to get a split network. This is a soft fork, and it is entirely possible for some sort of split network to happen. And they tried very hard by making it 95%. Presumably, if you're part of the 5%, it's going to be very difficult for you to continue on that chain. Something like an 80-20 split, it's going like the 20% can have a split part of the network, and that's entirely possible. This is why they're doing it. Also, giving it a year. The thing about soft forks is that with any sort of signaling, you have to have some sort of a timeout. And if you time out after 6 months, then you don't activate it, you need to do something else, or that proposal is dead. So making it a year is actually a very good thing, because that gives everybody time in order for it to come to pass. So, for example, SegWit, the signaling started in like December of 2016. It didn't get activated until August of 2017. So if we had something like a 6-month timeout like Tone suggested, that would be very bad. SegWit wouldn't have gotten activated, and things would have gotten worse than they were. So having a year or maybe even 2 years is a very good thing. It's a way to give everybody time to implement it and do whatever. That said, it seems like this isn't anywhere near as contentious as SegWit was. And that means that everyone's just going to probably activate it as soon as some activation method is possible. And we'll probably get it within like a month or two of, whichever activation proposal wins. I think within a month or two of that, it'll be there. And that's what I feel like is going to be for this particular soft fork. The trouble here, I think, from a development perspective, is that a lot of core devs are trying to set precedents for soft forks and so on. I just don't think it's going to be like that. Every soft fork is going to have its own issues, and every one of them that get integrated into Bitcoin is going to be done in an ad hoc manner and not some sort of orderly way in which they want it to happen. Despite wanting to do that, I don't think that's realistic. So it's for that reason that I think they should just say, okay, well, we're at like 80-90% of miners pre-committing to this. Let's just do it the easiest way, which would be, I don't know, a flag day or something, and just say, okay, and you can signal readiness by this date or something, and then go from there. That would be one particular way to do it, but whatever makes the most sense for this particular soft fork is what they should go with.
All right, I'm gonna plead my case here a little bit. All right, so because we've done a hell of a lot of shows. By the way, that's probably the thing I'm proud of the most on this channel. This is why I'm kind of mad at myself for not doing the Understanding Bitcoin podcast all year long, considering we have to cancel the conference this year. Probably the most the best contribution I've done to the Bitcoin community was doing all those shows with you, Jimmy, about the user-activated soft fork during those times. So I learned a lot, and here's where I'm going to push back a little bit. When you say 20% of the network could cause damage in my 80-20 split, you have an assumption that the 20% is against this fork. Now, in the last time, this
no, it's not. Yeah, because it's a soft fork. It can very much be they're ignorant of it, and that would still cause two chains. But
that's the thing. I don't think they're that ignorant of it. I think there is a. I think
you don't know that because these miners can be anywhere. You literally have no right. real way to know.
I'm with you on that, and that's why I'm saying a 95% supermajority today is almost impossible. I think it would have been, I mean, back in the day, pre-2013 days, it's easy to get a 95% majority because there's so many few miners. You really probably knew who they somewhat were, and there was just a small batch. Now they're all over the place. And there will definitely be more than 5% that don't care to signal. And until you don't
know that. I mean, like the thing is there's more money to be made if you do things correctly. Schnorr is going to reduce transaction sizes, which means that there's going to be more transactions per block available, which means that there's going to be more fees and so on. These are all good things.
I'm with you on the logic. It's just that, look, I would still be sometimes you need to be forced to update. Like I would still be running.
We don't want to force anyone to do anything in Bitcoin. You use incentives and that's it. If you force things, this is where you get centralization and badness.
I misphrased that a little bit. Sometimes you need to be nudged. Like for example, I'm a Windows user. I bought a Mac one time. It was the worst year of my life. And so I'm still a Windows user, and I would still be using Windows XP if Microsoft, kept supporting it, right?
And that's entirely right. You can run Bitcoin code from 2013, and it'll run fine. And that's part of the whole backwards compatibility and the idea of soft forks is that you don't force anyone to do anything that they don't want to. It's a voluntary system, and if you stop making it that, then you lose a large part of what makes Bitcoin interesting and special.
It's still a voluntary system. I just think that threshold, considering this is not contentious,
if it's not contentious, then 95% shouldn't be very hard to get.
I think 95% is hard in general on anything. That's my problem.
The thing is, like Bitcoin, the way Bitcoin works is that there's a strong bias to keeping everything running and safe. Okay. And anytime you introduce something, it better have a very, very strong majority in order to get in. And that's the idea, is that if you don't have an overwhelming majority that are willing to go with it, then you don't change the network. You leave it as it is. That is much more important than new features. And this is the problem that all these altcoins get into, is they want to add this new feature or whatever, and they get into weird hard forks and they get hacked and do all this other stuff. Bitcoin is different for that reason. There's a very, very high bar in order to get anything in, and 95% is not that, I think is the appropriate amount to be asking for something. It's got a lot of good features, but suppose somebody has like a good reason why not, then it might not get in. That's the idea. Is it's not, you don't just move forward, past everyone's objections. It's based on, is this good for everybody? And if it's not, then
All right, Jimmy is taking a way more passive approach to this, and he's a developer. And I'm not.
I mean, it should be voluntary. If it's not voluntary, if you're forcing people, then it's the same thing as a centralized thing. So this was what was so egregious about SegWit 2x, was that these companies were trying to force users to do whatever they wanted instead of allowing the users to say whatever. And that was the brilliance of the user activated soft fork. It was the user saying, hey, we are in charge and you don't get to tell us what to do. And if you remember, there were a lot of developers that were against the user activated software, and that still didn't deter them, because the users are ultimately in charge and you are master of your own node. No one can force you to upgrade your node if you don't want to. That's why this is completely backwards compatible. 95% is perfectly fine.
Well, as a user, when 95% majority is not reached in a year, I will also be on the user activated soft fork bandwagon.
And that's your right? And that may be the way in which these things get activated if you don't get to 95%. But 95%, I think, is a pretty safe number. If you do 80% or something like that, I think there's too much of coercion, network split, lots of other badness things that can happen.
All right. Well, we'll see. We'll keep up with this. We got a year, and probably starting sometime next year. We have a year, so we have more than a year. Probably about 15 months. I don't think the clock started yet. They don't have a flag day for. Is it even going to be a flag day, or is it if we don't get it?
No, it's gonna be like the last one, where after a certain percentage signal, then it activates 2 weeks later or something like that. So. I mean, we'll see. I don't think it's going to be very controversial, and yeah, I think it'll get through. I think most of them are upgrading on a regular basis anyway, so it won't be a very tough one.
Well, here's my again unqualified, unprofessional take. Sometime early next year, start the clock on 1 year. If 95% is reached prior to the year, get the damn thing in the moment you hit 95%. If a year ends and you're above 80% compliance, I say give a flag day 3 to 6 months after that year for automatic, to get it in there. And if we don't have 80% compliance after a year, then it's time to have another user activated soft fork campaign. That's my unqualified, unprofessional view on the matter.
I mean, we'll see. Even user activated stuff, it's not really useful if you're the only one doing it. So it's going to require some level of coordination at some level. We don't know how that's going to happen, and we don't know exactly how this will play out. But if Taproot doesn't activate on the network, that would still be okay for Bitcoin. If it activates on the network, even better. But that it's a win-win situation. I think the only way you lose is if you force people or you have a network split or something like that.
Well, we're gonna have another show at some point, like talking about Schnorr and Taproot more specifically and in detail. But the TLDR is, among several things that it does increase Bitcoin's privacy at the protocol level. So it's really important especially to those that are demonizing Bitcoin of it not being private. So let's get it in there.
Okay, that was very interesting. Thank you for your insights, Tone, Jimmy. It's a voluntary system. That's something to keep in mind. So now we are going to move on to the mempool. Let's see what's happening with the Bitcoin transactions. Take it away, Jimmy.
Can you switch the tab? Yeah, so you can see that it cleared last night, and I think there are more blocks being mined just because there's more hashing power on the network, probably due to price. Probably a lot of the mining rigs that were in near the hydroelectric dams have finally moved to other power sources since the rainy season in China is over. But yeah, right now you're looking at 30, 40, bytes, Satoshis per byte right now in order to get your transaction in the next, 10 minutes or so. If you're willing to wait, I think 1 to 2 will definitely clear overnight, possibly, over the weekend, certainly the 1 sat per byte will all clear as well. So good time to consolidate your transactions, especially with all of the price moving. So good times.
Okay, and I want to remind everybody to pick up a copy of Programming Bitcoin by Jimmy Song. He is also the author of the Little Bitcoin book, a great book to pick up if you want to learn how to program Bitcoin and find out why Bitcoin matters for your freedom, finance, and future. Thank you so much, Jimmy.
Thank you.
Also want to remind people that the Unconfiscatable Conference is happening in April of next year in Las Vegas. You'll get to meet Tone and Jimmy in person and learn more about trading Bitcoin from Tone and Bitcoin's technical aspects from Jimmy. So thank you very much, guys. And now we shall move on to the final topic for today, which is the price. Tone, you want to take over?
I'll take over screen share. Yes, Unconfiscatable, which is the shirt that I'm wearing, if you can barely see it in the upper right-hand corner of your screen. It is scheduled for April, but until we know who's going to be sitting in the White House, we don't have tickets on sale yet. We're going to wait until January to put tickets on sale. Also want to make sure that COVID restrictions are not worse than they are now. As hard as that is to imagine, things seem to always be getting worse in 2020 as the year gets closer to an end. Anyway, let's take a look at the price. I did a show this morning. Not much changed. Oh, I want to take a quick peek at speaking of forks, Bcash. And I'm really waiting for this difficulty adjustment in order to assess what is really going on.
Did you see the 16 megabyte block there?
Yeah, I was wondering about that because I really thought that they had an 8 megabyte limit, but apparently it's 16.
Well, I think it's even bigger than that. But yeah, I mean, there's a lot of people that want to sell their BCHA, I guess. But yeah, there's a lot of either that or they're trying to spam that chain in some way. But I suspect it's more likely that there's just a lot of transactions that need to clear because they're all in their mempool due to a lot of buying and selling.
Yeah, once this thing adjusts its difficulty, it's going to be very interesting. So I am keeping an eye on that, mostly because I'm really curious. Real quick, the monthly is going to update a little bit later today. It looks like we will have a new daily high close and a new weekly high close potentially.
I don't think it's a daily high close. The daily high close is like 18.9.
Right.
Or 19.1, yeah.
Which will be like our second highest daily close ever, maybe the third. Or
fourth. The top three are like 19.1, 18.9, and 18.9. So, yeah.
All right, so a little while to go there. But keep in mind that an MRI top is coming in December. So we have about 10 days to go. And this is one of my warning candles. The weekly MRI top is coming next candle. Now, right now, our weekly candle is very, very bullish. We still have 2 days to go. If this pulls back, this candle can certainly become a reversal candle. But right now, this weekly candle is very bullish. The daily scale gave us an MRI top yesterday. As I've been saying on this channel, I exited my long trade, not HODL. I'm not exiting my HODL, but my trade, I exited on Wednesday, and I exited more today because I took the high. And I won't be able to exit this weekend. So next week, if there is a new high, I will exit some more. Eventually, I'm going to run out of positions to exit. I'm not going to always exit half, but I have exited more than at this point. I'm now out at least 50% of my initial trade that started back here, and then I added, and then I took some away, and then I added some back in. But in any case, I believe that Bitcoin is topping sometime between 2 days ago, when I thought that was a potential top, and early next month because of the monthly MRI. So when people say, hey, the MRI is wrong, we don't know. First of all, there's no such thing as wrong. There's only trades that make money and trades that don't make money. But there's no such thing as actually wrong. But the jury is still out whether the MRI calls this top correctly. And we're not going to know until midway through December. And the reason we're not going to know until midway through December is because the topping process is taking place on a weekly basis and on a monthly basis. So on a daily scale, clearly the MRI did not top the market and we went higher today. I never trade the candle following the MRI top, but considering the weekly MRI still has a full week of potential, we can't assume that the MRI didn't work at all until at least another week to see what the weekly does, because the weekly is more important than the daily. I have already exited 50% based on the daily scale, and next week I'll probably exit another, well, maybe not the entire thing, but if next week we're going higher, if next week we're breaking 19,000, I'll be out at least another 50%, leaving my bullish position at 25%. I normally don't leg out of trades. I normally just get out on as it's falling, but it's not falling, and I'm trusting the MRI that it's a topping process. I can always get back in, but I do think we're getting overextended, and that's why I am taking my exits on those bullish trades. Going into the weekend, I am completely neutral on the daily scale because I never trade the candle to the upside following an MRI top. If this was a down candle, if this was the candle in the opposite direction, I would either be out completely out of my long and potentially entering a short, but I would never short Bitcoin, especially in a bull market. So all I would do is be out of the long position. GBTC premium, that's where I got out. I mentioned this morning that I was going to exit GBTC at $20.95. I got that fill. GBTC went as high as $21.40 was the high on GBTC, and the premium is also only at 20%. So the premium is not where it was the last time GBTC was that expensive. In fact, look how high that premium was when Bitcoin was rallying to whatever that price was, like I think that was about 12,000 before COVID. The GBTC premium was sitting at 40%. And if we take this back to June of last year, where is June of last year? Over here. I believe that's June of last year. GBTC premium was above 30%. And a few months earlier than that, it was all the way at 40% again. So there's definitely money to be made off of GBTC premium if you know how to properly handle it. I got out over here. I previously got out at, so I got out at about $20 and say 40 cents around there. I got out again at $20.95. And the next time I get out is going to be closer to $22. Or maybe even above $22. I will wait. I will stay patient, and I will exit on the way up because I think we're getting a little toppy. Gold, I am still leaning bearish on gold. S&P 500, I am kind of neutral here. I think it can bounce off of this support line, but going into Monday, I am slightly, not that it matters, nobody can trade it right now, markets are closed. I am slightly leaning bearish going into Monday, but not enough to take any short trades. If anything, we got a little more downside, maybe another day or two. Ideally, I would love to pick up the S&P to the upside on an MRI buy. However, if there is news over the weekend that Trump is making a claim to the presidency, that is political uncertainty, which could certainly cause disruption and drop the price of stocks. And that's pretty much it. Keeping an eye on the B cash, waiting for it to go below 1%. And that's when it becomes irrelevant. I also mentioned I was going to spend the day trading today. The stock I was trading today was Tesla. I would like to tell you good news or bad news, but it was really uneventful. It was a new strategy I was trying out, and I'll need to try it again. Stock didn't move that much, but it was a complicated option spread. And I also learned that maybe Tesla wasn't the best stock, because back when I was playing around with it and testing it like 6 months ago, or Tesla was at a much higher price because the split wasn't there. And maybe I should have used it on Amazon instead, because it does kind of require a high-priced stock. So uneventful. I'll try it again, and then maybe I'll have something, interesting to show you guys. But I don't. Okay. That's pretty much it for me, unless Jimmy has price questions.
I mean, when all-time high, man. I think we've all been asking about that.
Oh boy. So I am still of the position that we will turn the corner and have a pullback before the all-time high. How much confidence do I have in that? Not very much. So,
I mean, if your indicators can align, you can have 9 more days of upside on the daily, and that would be enough. And that would coincide with the MRI top on the weekly, in which case, then that's a lot of upside. You might hit the top and then come back down from the all-time high.
Oh yeah, you are absolutely right. We are kicking off. In about an hour or two, we're going to have the second candle into a second consecutive MRI top. And if tomorrow we go above today's candle, I now become extra bullish, thinking that we have a shot at a second consecutive MRI top. And that's the beauty of this indicator. Like right here, this was a rough candle for me to deal with. But when the MRI doesn't reverse the market, I have no problem getting back into the bullish trade. And this would be very interesting, because we can align the daily and the weekly MRIs together next week. And that gets us a few days away from also aligning with the monthly MRI top on December 1st. So it is absolutely possible that we break 20,000 next week. In fact, if tomorrow we break 19,000, even by $1, I would prefer that scenario, because that scenario lines up my indicators better than any other scenario.
Yeah, and in that case, you could have a 1 to 3 week pullback and continue going up. And then like top out on the December stuff, and then come back down and then go back up again after a couple months.
Yeah, look, it's there. We have the all-time high. I should put the line in there. We have a thumbnail ready. And the moment, wherever I am, hopefully it's not the middle of the night. I got to have some kind of, alarms set. I should put an alarm in my Bitcoin checking app. As we get close, I would say the moment Bitcoin touches 19,500, we need to immediately go live. And I can't preset the stream because I don't know when that will happen. But once we go live, I'll just shoot off the Zoom link to a bunch of people, and they're welcome to join us on the all-time high stream. But yes, that is the plan, to go live the moment Bitcoin breaks $19,500.
Yeah, the chart looks really nice. It really does look like just sort of like this parabolic move. It's always nice to see, and it's so close.
Great analysis, Tone. Thank you so much for that. When new all-time highs? That's the question on everybody's lips. I think that's it for today, unless anyone has something they want to add.
I think that's it.
We're about 1,000 away, 1,000 away, and we're there, which is like what, like 5.5%, something like that. So close. It feels so close.
So close. Okay, so thank you very much, Tone, our Bitcoin educator and trader and host of Unconfiscatable Conference in April. Make sure to check that out in Las Vegas next year. And also thank you very much, Jimmy, our Bitcoin expert in programming. Pick up his copy of Programming Bitcoin as well as the Little Bitcoin book. And I'm Florence Correa, journalist and your host today, this Friday, November 20th. Thank you so much for joining us.
All right. Tone, you want to go first or me?
Oh, no, yeah.
All right. Fiat Delenda, this song is done.
All right. Thank you, guys. Thank you, Florence, for hosting. Shows will get smoother as always. Thank you so much. Thank you for taking over for Christine. And we're wishing Christine the best in her new venture with a CoinDesk. All right, guys. See you all on the next one. Can't promise any streams this weekend unless we're hitting all-time highs. Bye, guys.